we, we have a session which has the structure as planning of audits, compliance of accounting standards, compliance with accounting standards and standards of auditing, testing of internal financial controls and reporting, general discussions on audit and on various areas. We have an eminent speaker, CA Shyam Ramadhyani, sir. May I request Rejo to please escort Shyam Ramadhyani, sir. Please welcome with the flower bouquet, sir. Yeah. I have been given the privilege of introducing the Doyen of Chartered Accountancy. He has done his qualification in BSc. He is a BSc graduate from St. Joseph College, a science graduate, a fellow member of the Institute of Chartered Accountants of India, associated member of Cost and Works Accountants of India. He had a brilliant academic record as a rank holder in CA and CA Inter and CA Final. His present positions are, he is a senior partner of BK Ramadhyani & Co., a firm of chartered accountants with over 80 years of professional standing. Has handled audits of several large listed and unlisted companies, banks and insurance companies, and has rendered consultancy services in the area of taxation, including cross-border transactions, inbound and outbound foreign investments, presentations of operating manuals, design of management information systems, structuring of mergers, amalgamations, acquisitions, family concealing, etc. His accomplishments. He has been co-opted for many more committees. Few of them are Export Advisory Committee, Auditing Practice Committee, Accounting Standards Board, Corporate Law and Corporate Affairs Committee of the Institute of Chartered Accountants of India. He has presented several papers in the region, national seminars, as well as authored articles in the Institute Journal. Has passed the certificate course of ICAI on International Financial Reporting Standards. So, we are privileged to have you here for this August gathering. So the timings, I would like to state that the timings, we have to close by 1:30. We can have 10 minutes extra for our discussions so that it is not going to affect the next session. Thank you, sir.
Good afternoon, friends. At the outset, I would like to thank Bangalore branch for having given me this opportunity to be present here and to share a few thoughts with all of you. It's good to talk once in a while because it gives you an opportunity to refresh yourself and be amongst people who ask you a lot of questions. Particularly our friend Anil brought out many things today morning. And I think it's good to remain in the company of various people who have the capacity to ask different questions. Some things which you have not even thought about, you know. Anyway, let me go ahead with what has happened with my subject. I've been asked to cover a few topics. One is what are the accounting standards which apply to a bank? What are the auditing standards which apply to them? Some aspects of the IFC testing, which we need to report upon even for nationalized banks. And the last one is the LFAR and certain general aspects of an audit. I'm not going to deal with advances because this topic is going to be covered completely by my learned friend Suresh in the afternoon. So I will be covering all topics other than advances. And if you have any questions on any topic other than advances, I'll be glad to answer them. I don't want to step on Suresh's prerogative to speak on advances in the afternoon, and he's a very learned speaker. I've just tried to summarize what are the various accounting standards which are applicable to our bank. First of all, Ind AS is not applicable to them, even though they're all listed entities. They've not yet been made applicable. The following standards are applicable. One is disclosure of accounting principles. These are usually done at the head office of the bank. I think it will be a good idea for you to download the accounting standards on the website of the bank and then go through these accounting standards even though you're only doing a branch audit. So please do not ignore the accounting policies which the bank has published in the previous year's financial statements. At least please download that and go through that, and then maybe in your audit report you could mention saying that you have assumed that the same accounting policies have continued to be adopted even in the current year, because you don't have access to the latest accounting policies followed in the current year. You only have the previous year. They are there in the bank's website. You do well to download them and then go through them to see whether there's anything specifically which has been mentioned there. The second one is contingencies and events occurring after the balance sheet date. I think Mr. Gupta has already brought out this dichotomy where the Reserve Bank of India does not accept money received in the month of April, which can go and regularize an account as on 31st of March, because they feel that this is a position as on 31st of March. There were weaknesses, and a subsequent receipt you do not take into account to regularize an NPA on 31st of March in very much the same manner in which while the account is regularized on 31st of March, it might have become NPA subsequently. You're not going to classify that as NPA. So the same logic applies in both cases. Net profit or loss of the period, prior period items, and change in accounting policies. Changes in accounting policies, if at all you find anything, then that standard will apply. Otherwise, banks generally don't change their accounting policies unless it's been mandated by the Reserve Bank of India. Revenue recognition, AS9 is important. I think one important issue is that many banks account for certain types of income on cash basis. LC commission, bank guarantee commission, many of these things are recorded by banks at the time of receipt. So really speaking, this does not follow the accrual system of accounting, but the RBI has given certain guidelines of what is materiality and how this should be applied. Usually the central statutory auditors take a view as to whether the bank guarantee commission and LC commission is accounted more or less for the entire period on the date of receipt, and you're not prorating what belongs to the period beyond 31st of March 2023, whether that violates the accounting standards in any manner. Then AS10 regarding property, plant and equipment, the effect of changes in foreign exchange rates. As far as branches are concerned, you must make sure that all your foreign currency assets and liabilities are translated at 31st March rates, particularly deposits. Advances, I'll leave it to Suresh to deal with it. But your FCNR deposits, your RFC deposits, if at all you have any liabilities in foreign currency, you will have an obligation to convert these foreign currency liabilities in terms of AS11. And as far as derivatives are concerned, which is forward contracts, any rupee dollar options, these mark-to-market are usually done at the head office. They're not done at the branch level. They're usually done at treasury. So it is best to say in the audit report that these aspects have not been done at the branch level, even though there are forward exchange contracts outstanding in the books of the branch as on 31st of March 2023. Then accounting for investments, generally not applicable for a branch because these investments are all held at head office. Employee benefits, definitely this standard is applicable. You have liability for gratuity, you have liability for pension, you have for anything else. These are again dealt with at the head office. So you do well to say that in your report explicitly clarify that the application of certain accounting standards, though they are applicable to the bank as a whole, these need to be dealt with at the head office, and they have no provision has been made for accrued gratuity, accrued leave encashment, accrued pension. You do well to mention this very clearly in your audit report. Related party disclosures, again, mostly applicable, mostly done at the central office, because at the branch level you do not have details of directors, any companies where they're interested. Usually for nationalized banks, it's purely the any holding company, subsidiary company, where you've had transactions with, or with any associates. You might have, for example, Canara Bank, a Canara Bank branch might have had transactions with, let's say, Can Bank Factors, Can Bank Housing Finance Limited. They might have had transactions with some of their related companies, but then usually there are no third parties involved in all this. Hopefully, none of the directors' companies have had transactions, because in any case, Section 19 of the Banking Regulations Act will apply there. So hopefully there would be those transactions would not be there. AS 29, provisions, contingent liabilities, contingent assets. Here Mr. Gupta mentioned, stating that RBI feels that even for non-fund based limits, some kind of impairment has to be applied for. I would think that while the prudential norms don't cover non-fund based limits, I would think that under AS 29, if there are any guarantees which you think will devolve, or letters of credit which you feel will devolve, and these letters of credit and guarantee are not going to be paid in future, I have a feeling that you need to provide for them you need to recognize any loss under AS 29. May not be under the prudential norms, but as far as AS 29 is concerned, because I think there are examples in AS 29, if you go to the appendix, which deals with guarantees given by the company on behalf of a customer who is on behalf of one of your companies, or on behalf of a customer who's weak. And there are doubts about so if you've got the basic facility has become NPA, and then there are still undevolved LCs, bank guarantees, outstanding as on 31st of March 2023. In my opinion, you might have to evaluate this from the point of application of AS 29, even though the prudential norms are completely silent about non-fund based limits. Let us look at some of the basic standards in auditing. The first one is I've listed out all the standards which might be applicable. So it's important that you issue the engagement letters mentioned by Mr. Gupta in the morning. Please don't issue, just say, I accept your appointment with pleasure. Please list out all the things which have been mentioned in the standards, and it would be a good idea if you can please get them acknowledged, even though, of course, he has opened all our eyes by producing a circular stating that even if the engagement letter is not acceptable by the auditee, as long as you have sufficient evidence to show that the engagement that has been delivered to the client, you're okay. But then nevertheless, it's best that you try to get that engagement letter accepted by the I'm sure all the other things are fairly common. Now, important thing is regarding auditors' responsibilities in relation to fraud. This is where the government feels that we are falling short in their eyes. They feel that we are not able to do anything proactively to report on frauds. About 10 years ago, we had the case of this Punjab National Bank, where there was a fairly large banking fraud by Nirav Modi and Co. at Brady Street PNB, and then this went completely unreported, both by the bank's own internal auditors, their inspectors, the concurrent auditors, as well as the statutory auditors. This went completely unreported. I mean, in fact, this and Satyam were the beginning of all our woes, where the government starts feeling that, yes, auditors are tools of the management, they don't do too much of independent work. I mean, the whole thing has started from there. So in the case of Nirav Modi, as well, I mean, what happened at Brady Street, Bombay, where certain letters of guarantee given by the branch on behalf of Nirav Modi's companies were kept outside the books, were not even shown as a contingent liability. And luckily, of course, subsequently the government, I mean the RBI mandated that, saying that even the SWIFT messages should get integrated to the core banking solution. But at that particular point of time, the SWIFT messages were not integrated with the core banking solution. You could have a transaction put through SWIFT, even though a financial transaction which did not originate through the core banking solution could also be put through SWIFT. I think they have taken steps to plug that possibility, whereby I think particularly financial transactions, it needs to originate through the core banking solution, and only then it could be sent through a SWIFT message. Otherwise, a large number of financial transactions were kept outside the books of account at Punjab National Bank, Brady Street, and we all know about what happened there. And of course, the government of India is still trying to extradite him, and then we have not still succeeded in that. I think the Antigua government has recently said we're not going to extradite him to India. I mean, so this auditor's responsibilities related to fraud is quite important, and I think he's also brought out that circular of where anything above 1 crore, you need to report this immediately to the government. And some of us might also be doing companies, so even Section 143 of the Companies Act will also apply as far as reporting of fraud is concerned, not only to the RBI, but also perhaps even to the MCA. Yeah, a lot of discussion took place on SCA 580, written representations. I think if the branch refuses to give you written representations, you must bring this to the notice of your statutory auditor and ask him for specific guidance. That is the least you should do. Write to him, officially put it on record, not just speak over a telephone call or something of that kind, or send a WhatsApp message to him, but some verifiable record where you write to the statutory auditor saying that they are refusing to give you a written representation and requesting his intervention in the matter, stating that this is mandatory under our standards. In case this effort does not bear fruits, I think it may be a good idea to state in your report where you are saying that we have carried out our audit as per auditing standards prescribed by the institute. I think there it would be a good idea to make an exception stating that, except that I have not obtained a formal representation letter from the bank, but the bank has given the bank, and maybe you can also mention saying that in the case of this bank, the head office is instructed that all MRs will be given to the statutory auditors directly and it will not be given to the branch auditors. Maybe you could mention there, as well as in the last paragraph of LFAR, where they ask you, are there any other matters which you would like to bring to the notice of the central statutory auditors? Even there you could bring this out. One of our friends has brought to my notice saying that the implementation guide on SA 580 requests us to disclaim any opinion in case the bank refuses to give you a written representation. I will just read this because it's very important. Question 21, what are the auditor's responsibilities in case management fails or refuses to provide written representations referred to in FAQ 6 and 7? If management fails or refuses to provide written representations referred to therein, the auditor shall disclaim the opinion of the financial statements in accordance with SA 705, modifications to the opinion in the independent auditor's report. It's a very extreme view, but nevertheless, this is what the institute says. I think we all need to introspect and decide whether we need to take this extreme step of disclaiming an opinion completely in the branch accounts if they do, and maybe if we threaten to do it, maybe they'll give you the representation letter. The problem will probably get solved because nobody would want a disclaimer, in which case perhaps they will finally yield and give it to you. I think collectively, probably all of us should resort to this. Not one person doing it, because then you are afraid that you'll get targeted. I think it is important collectively as a profession. I think we need to put our foot down and saying that if you do not give us a written representation, we will disclaim an opinion. And in which case, I'm sure the bank will turn around and give it to you. You won't have a situation where you have to give a disclaimed opinion. But I think definitely at a very minimum, you should, yes sir, I mean, we'll discuss that, Anil. I beg your pardon? Yeah, sure. So I think, but definitely I would think that you should add a paragraph stating when you're talking of we have complied with our standards in auditing, mention it there, mention it again in the LFAR at a minimum, and then collectively if all of us can take a stand saying that we will disclaim, I'm sure it will, people will realize at least that a larger issue, I think people realize that auditors have got a spine and they're not going to just do whatever management wants us to. Identifying the risks of material misstatements, Anil wanted me to speak about this. I think there are some general guidelines available as to what is a materiality amount. The materiality amount in the case of a branch, this could perhaps be a percentage of, most of the auditors adopt a percentage of the profits of the branch, or profits of an entity for deciding materiality. The general norm I've seen, at least it's there in the published accounts of Infosys, where they've used 5% of the profits as a yardstick for materiality. It's been mentioned in the audit report. The auditors are mentioned in the audit report straight away saying that they have adopted 5% of the profits as a materiality threshold. So you'll have to adopt, you may have to adopt some materiality limit. Of course, the Indian firms, we are quite frightened to use something as large as 5% of the profits. The big four do it very easily. But then I don't think we're all very comfortable using such a large materiality limit, particularly if one branch is showing, let's say, 200 crores profits. I don't think we'd all feel comfortable to say that anything below 10 crores is, or even individually or collectively is not, collectively, not individually, collectively is not, not material. I'm not sure how many of us are comfortable doing it, but please understand that you need to accumulate all unadjusted differences. You cannot look at each entry by itself and say this entry is not material. You need to accumulate all the unadjusted entries, total them up, and see what is its impact on the financial statements. And in fact, you're asked also to summarize the unadjusted differences in your rep letter. And if for a regular company or a regular anybody, you're expected to bring this to the notice of the audit committee, also giving a summary of all unadjusted entries. So these unadjusted entries, the only publicly available threshold that I've seen is an Infosys audit report where they mention it's 5% of the profits. But of course, there are different considerations. If let's say the profits are so small that even a small adjustment would turn it from a profit to a loss. There could be situations where the profits are very small, and collectively for the bank as a whole, if tomorrow the by not making certain adjustment entries, if you made those adjustments, the profit would turn to a loss. Then I guess perhaps even smaller limits will have to be applied. 5% would be too large. Of course, where it's a new or a newly started company or a loss-making company, people use some percentage of a very small percentage of the revenue. A company which is still in the production, they use a certain small percentage of the fixed assets value. So it depends upon some benchmark you might have to establish and then judge materiality from that point of view. But please remember, you cannot look at any unadjusted entries in isolation. You have to look at, you have to make a summary of all unadjusted entries, keep a track of them, and assess materiality as a whole. And not individually. And it would be a good idea to get a summary of all the unadjusted entries summarized in your rep letter. And wherever you're making a presentation to the audit committee, give them a summary of all unadjusted entries. And of course, if there is statutory non-compliance, or if there is, let's say, suspected fraud, you would not use these kind of limits. You would almost have zero tolerance towards any of these. If tomorrow there is any statutory non-compliance of important rules and regulations, doing things which are against the laws of the country, or let's say there are frauds, even if they're small, I guess the yardsticks of materiality would be completely different. Yeah, I think before you commence the audit, what is important is the NOC from the previous auditor. Mr. Gupta has mentioned about this very clearly. So you need to obtain an NOC from the previous auditor. Please don't take it easily, stating that this has come through from a bank, from a nationalized bank, and indirectly with the knowledge of the Reserve Bank of India. So you need an NOC from the earlier auditor, even under those circumstances. The appointment letter from the bank, your engagement letter in accordance with SA 210, and then it is important to know that the RBI has mandated that IFC will be applicable even for a bank, even though it's perhaps not a company under the Companies Act 2013. Now, under the Companies Act 2013, we all know that auditors are reported to comment upon the adequacy of internal financial controls or financial reporting. We'll just call it as ICOFR in short, so that we don't spend too much time on expanding this all the time. So as far as ICOFR is concerned, the RBI has directed that central statutory auditors of banks should include in their statutory audit report, in their independent auditor's report, their comments on ICOFR. Now, from what I can gather, different banks are adopting different practices as far as ICOFR is concerned, as far as branch auditors are concerned. So some of the banks, it appears that this aspect is mostly handled by the statutory auditors. Or two, there could be a situation where the statutory auditors decide which branches should be asked to comment upon ICOFR. And there could be another bank where all branch auditors are asked to comment upon ICOFR in its full scope. So it depends what the instructions given by your central statutory auditors are. And then you follow that accordingly. And if you are expected to do a full scope ICOFR, then you have to definitely ask from the bank what is their RCSA, the risk control self-analysis, their the RCM, the IFC documentation. You have to obtain from them the entire IFC documentation, the questions that they have, what is the testing that they have done internally. Whether they have put their records to internal testing from because the guidance note on ICOFR requires the auditee to do their testing. The auditor should also do the testing, and later on you compare whether these two are in consonance with each other or there's any discordance. So it's important that where you're expected to do a full scope ICOFR, it is important that you get from the bank the full IFC documentation that they have prepared. What testing have they done during the year, either by the concurrent auditors or by the inspectors or whoever that is, who has done this kind of internal testing? What are the processes which are passed? What are the processes which are failed? You need to find out all this in case you're asked to do a full scope ICOFR as far as the branch which you're going to audit. If your statutory auditors want you to give a full scope ICOFR, you need to understand all this. It can be quite a complex job, but I think doing this ICOFR can help you to some extent to make sure that every process has been carried out the way it is envisaged. And I think if that is done, if you have sufficient documentation, even if tomorrow some fraud does take place, we would have sufficient documentation available with us to prove that, yes, we have done our job. I'm not sure whether you can find out all frauds which have taken place, but if you do a full-fledged ICOFR and you ensure that every process mentioned in the bank's internal documentation, the people who need to approve every transaction, what are the controls which are there within the core banking solution on Finacle or whatever software that they're using, at every step, whether it's been properly documented in the books, even if you can check under the guidance note, you're expected to check 25 transactions, but even if you can check 10 transactions, of every type, I think it would be helpful if we are in a position to do this ICOFR so that the chance of frauds remaining undetected would at least get minimized to some extent. Because you're going through the entire process, and if there's a process lapse, please point it out in your report. Don't worry that you have not actually found a fraud. If there's a process deficiency, it should be reported so that tomorrow, if something does go wrong, you have a backup to say that yes, you have pointed out these process deficiencies in the bank system. It could be an automated procedure, it could be a manual procedure. Please ensure that you point this out. If your branch is a specialized branch which deals with, let's say, with foreign exchange or with clearing or with government pension business, then you need to understand the rules of that particular business before you start the branch. This would be applicable not across everything, but if you do get large branches, I'm sure somebody like Gupta would be getting large branches even if he's not the central statutory auditor. So they would of course have excellent knowledge of all these activities, having done the central audit of Canara Bank and other banks. But you need to know foreign exchange particularly can be a fairly specialized area. How do you deal with foreign currency term loans? How do you deal with packing credit? How do you deal with post-shipment finance, foreign bank guarantees, foreign letters of credit, all the reports which you file with RBI, currency trading, I mean buying and selling of currencies, forward contracts in foreign currency. All this requires specialized knowledge, and if in case your branch deals with any of these activities, then it would be important to know some of these things, and there are plenty of reports to be submitted to RBI regularly. These are, of course, usually some branches nowadays. Most of the banks today consolidate all this at the head office, at the treasury back office, and then they submit all this to RBI. But nevertheless, the basic information is taken from the core banking solution. Before you commence the audit, please have a good walkthrough of CBS. Whatever CBS that the bank is using, please get a walkthrough of that. What are the various data fields in that? What are the setups? In fact, ideally, we should know all the system-generated entries. What are the automated entries in the system which get automatically passed? What is the logic behind all these entries? Then what are the interest rate changes that have taken place during the year? The last year which has gone by, 22-23, would have seen a lot of changes both in rates of deposits as well as advances from time to time. And most of these changes are done in the core banking solution at a central level. And then the logic and the percentage basis points which has been prescribed for any particular loan above that rate would then get automatically applied from the effective date mentioned therein. So it would be a good idea for you to find out what are the changes in the interest rates that have been done during the year, and both for deposits, advances, charges, GST, TDS, what changes have been done in all these masters during the year, and whether these changes are being implemented properly across all the across a sample of at least sample of transactions. All of us know that interest rates have been volatile during the year. So several changes in rates would have taken place during the year. And in fact, even today we have got a situation where banks are accepting deposits which cannot be prematurely encashed because they're offering you a high rate of interest. I think some of the deposits which have got for 400 days and they give you something like 7.5%, they are saying that this cannot be prematurely encashed at all. The deposit is not encashable during this entire period. This is a new feature that we are seeing. Perhaps I've got ALM mismatches in these cases, these deposits. That's the reason why they want to preserve these deposits of a certain period. So it's important for you to understand all these interest rate changes and any conditions which have been attached to it, so that during the course of your sample, at least you could see 2-3 transactions of that particular type. Similarly, any charges which are there for, let's say, opening LCs, opening bank guarantees, for failure to submit bank stock statements, or failure to renew your credit facilities, what kind of interest rate changes or charges are they going to levy for any delays in stock statements, loss of checkbooks, whatever it might be. It is important to understand some of these things and at least check a few transactions where whether these charges have been applied properly. Review systems prevalent at the concerned bank for seamless automation of NPAs. The Reserve Bank of India has been directed by the Reserve Bank of India to put in a system of seamless automation of NPAs without or very minimum human intervention. And the statutory central auditors do give a certificate to RBI stating that this seamless automation has taken place. So I think with this, the chances of mistakes in NPA classification, other than perhaps some of the areas which Mr. Gupta pointed out, have really come down. Because they have clearly specified that if they want to make any change, it should only be through a memorandum of changes, which is properly documented and approved by the audit committee of the bank. Other than that, the system itself should calculate the amount of NPA. I don't know what is being done across all the banks, but let's say the core banking solution itself, let us say take Finacle as an example. Finacle itself would identify, let's say at least the 90-day rule it would identify by itself. And the moment the 90-day rule is breached, whether in the case of CC, term loans, or cash credits, it would get automatically marked as NPA. And the moment an account gets marked as NPA, the system itself will de-recognize the recognition of interest as income, or it'll either take it to a memorandum account or not record the interest at all and only record it outside the GL. And all unrealized interest would get reversed. But here there is one catch. First thing is that you have to ensure that we don't have multiple CIF IDs for a single borrower at this stage. If there are multiple CIF IDs for a single borrower for any reason, then what would happen is the system would not classify all loan accounts in the same bucket of classification in terms of the guidelines of the RBI. All of you know that if one account is NPA of a borrower, all facilities of that particular borrower are also to be classified as NPA into the lowest bucket. So while most of the times the CBS will ensure this, but if for any reason you have got multiple CIFs for a single borrower, the system would not be capable of identifying whether all facilities have been classified as such. I've seen one particular case in one of the banks where we are doing, where particularly proprietary businesses, where there's an MSME which is run as a proprietary business. So the business is given a loan in the name of the business. Okay, whatever is the name of the business, it's given there as the CIF is created in the name of the business. But the proprietor's also got, let's say, housing loans, personal loans, vehicle loans in his individual name. there is a separate SIF ID for that. So there's this proprietorship business where a single borrower who's really a proprietor of a business has got two SIF IDs, one belonging to his business and one belonging to his individual individual type of loans like housing loan, car loans, or even personal loans which he might have taken. I've seen banks now trying to classify loans into the same bucket of NPA, not only on the base of SIF, but also on the base of a common PAN number or a common Aadhaar number. So there is some software called as dedupe. So when the transaction is put through this dedupe, it can identify probable cases where there is multiple SIF IDs for a party depending upon certain fields and characteristics. And two, if tomorrow they identify that yes, there is a proprietorship business, though the SIF number is different based upon the practice of the bank, the core banking solution also checks whether this borrower, any party has got, any two SIF accounts have got the same PAN number or the same Aadhaar number. If they've got the same Aadhaar number or PAN number, they're considered to be one borrower, and then both of them are given the same classification. I don't know whether this is done manually or whether there's again an automated process for this. It could vary from bank to bank, but nevertheless, please understand that the RBI rules specify that all facilities of a borrower having multiple facilities should be put into the same bucket. You cannot have different classifications. So the Aadhaar number, PAN number could be particularly relevant, and we have also seen some cases where unconnected people have the same PAN number. This could be a case of fraud, of impersonation of PAN or impersonation of Aadhaar. Mr. Gupta, does the CBS system have capacity to do this completely, or it goes to another system, another NPA system? No, but later on, applying all the rules of NPA, do you have another software, another NPA system which deals with it, or I mean, Finacle itself? Okay, so and anyway, some of the situations which he has pointed out, which he had put down in his slide, maybe they are the circumstances where you need to do, but I think our risks have to some extent reduced because of this RBI's directive that there should be a seamless automation of all NPA accounts. The statutory orders are supposed to give a specific certificate regarding this as a part of their annual audit. And so with this exercise, I think the fear that there could be large-scale mistakes in NPA has to some extent diminished. It's a very positive thing the RBI has done. I hope we'll come to a stage where we'll have to stop worrying about too much about NPA identification. Yeah, these core banking solutions consider the bank as one. It does not make a difference whether he has got in branch A or in branch B. And ideally speaking, as per their system, if there is a single person who's borrowing the money, he should be given the same SIF number. And today, in addition to this single SIF number, most of the core banking solutions today have got a feature where if somebody has got a common Aadhaar number or a common PAN number, they are classified, they're considered to be one and the same, even if the SIF number is different. Huh? No, but the bank's core banking solution will identify this. This will be a case where if your account, one of your accounts might become NPA because they have become the main account in some other branch is an NPA. So you have to find out why they have done this, and I'm sure they will tell you that in the other branch, the main facility branch, it has become an NPA. So even the sub facility at your branch, you're treating it as NPA. They will be happy to tell you that. It has to be treated as NPA. That's where we said that it can be identified based upon a common PAN number or a common Aadhaar number. So if both that account, yes, wherever it's in two different branches, it's a little difficult for an auditor of a branch to find this out. But as far as the core banking solution is concerned, the rules are framed in such a way that the system will automatically treat this as NPA in both the branches. Sir, I think banks have been on a core banking solution now for many, many years. No, I mean, yeah, answering your question, the core banking solution has been there for quite some time. I think the implementation, the migration from the legacy system to core banking system has been fairly well done in most of the banks. It has stabilized to some extent, and if there are specific problems in any bank, you need to deal with it. Yeah, and this would also be seen both at the regional office or the central office, and would be reviewed by the central statutory auditors. Yeah, you also need to understand the various types of products which have been offered by your bank, both loans and deposits. What are the various kinds of products which are being offered, including digital banking. Today we have one more channel through which deposits and advances get accepted. This could be through digital banking, where the customer does not even come into the bank's premises and all the documents are uploaded online. So in your samples, please ensure that you at least pick up a few cases where where the accounts have been opened through digital banking system. Both savings bank account, current accounts, maybe even in some banks, even small loan accounts might also be through digital banking. And recently, I also saw an article in the Economic Times, in the Business Line, where the RBI has advised banks to review their relationship with fintechs. We have so many apps through which you can borrow money today. And many of these apps have got back-to-back arrangements with banks to sanction the loans. And the RBI has observed that banks which are mostly depending upon the diligence done by the fintech, by the fintech company, they have a higher chance of the loan becoming delinquent as compared to their own assessment. So they have, recently I saw an article stating that RBI has directed all the banks to come out with proper controls when a loan gets originated through a fintech. So please, in your sample, please check a few cases where transactions have come through a fintech or things have happened through digital banking, so that you have covered those kind of transactions. Today in many banks, many current accounts, savings bank accounts, deposits being placed, all these are through net banking or through apps. More and more transactions are happening through apps, and that is one universe which we should not omit completely, because something can go wrong. I think the next big fraud is lurking there. Yeah, your automation of your tax compliance is very important, particularly if you're also doing the tax audit. Of course, even important, even if you don't do the tax audit. For example, this banking cash transaction tax. This cash transactions can spread across several branches. It need not be in one branch alone. It could be in several branches. If the aggregate cash transactions, cash withdrawals from your account exceeds the stipulated limit across all branches, the banking cash transaction tax will have to be deducted at source. Similarly, we might also have this purchases above a certain limit, this 50 lakhs limit. Again, this is across branches. You need to make sure that as far as a single vendor is concerned, there's only one single vendor code, and if the transaction is in a single vendor code exceed 50 lakhs, that appropriate tax is deducted. And we have this new issue also saying that where the payee has not filed tax returns, then the rate of tax goes up. These are factors which are usually ignored by the auditors. I mean, or we overlook some of these things when we are doing an audit. It's extremely important that when you're looking at tax compliance, particularly so when you're doing a tax audit, you look at all these new sections on banking, cash transaction tax, purchase above a certain limit, TDS on LRS, the newly introduced enhanced limits of tax on LRS. These things have to be applied across the bank. It cannot be on a branch-by-branch situation. Of course, LRS, you're expected to operate only through one branch. That's what the RBI guidelines require you to do. But there could be cases where multiple branches of the same bank have given LRS remittances. So they need to get aggregated together. And some of these areas are usually not automated. You also need to find out whether the bank distributes any third-party products whether they distribute any mutual funds, insurance policies of other entities, and if so, what is the kind of income that you need to receive from there, and what kind of a database is being maintained as far as these are concerned. Please, it's important, this last one, that you have a proper audit planning documentation for all your audits, where you, including your branch audits, you have a proper audit planning documentation, because this is something which is generally reviewed by the peer reviewers. And now, I think in a year or two, every one of us will have to go through a peer review. And for those of you who do limited reviews of listed entities, you must have a peer review certificate and a valid peer review certificate. So it is important that you have an audit planning document before you start the audit. This would specify your materiality limits. It would specify what are the areas in which you depend upon work of other experts. Theoretically speaking, even all your valuers in the case of a bank, your legal advisors in a bank, these are all work of an outside expert on whom you're relying upon. So strictly speaking, if one has to, if you have a very large facility, not small facilities, if you have very large facilities where you're depending heavily upon the valuation report of an outsider, or there's a legal advisor's opinion as to the marketability of the title of the immobile property, not immobile goods, sorry, I stand corrected. All this, the standard of the institute on work of an outside expert may apply. And some minimum procedures which are prescribed there you need to do. Both the guidance note of the Institute on ICOFER as well as the technical guide of the Institute on bank branch audit as far as IFC is concerned, it would be important to understand this to the extent possible. Okay, most of this we've already covered. I think 2 or 3 important issues which the RBI places a great degree of importance. One is to make sure that every loan has been sanctioned by the authority who had the power to do it, that it's been done properly as per the delegated power of authority. So in the sample of advances which you verify, you must ensure, or any kind of transactions which have happened, you need to ensure that they have been authorized by the person who's authorized to do this as per the bank's delegation of powers. So there's one thing which is important. 2, what are the systems and procedures the bank has put into place to ensure end utilization of funds? Again, here the RBI feels that we as a community have not done what we should be doing. The RBI expects us to monitor some kind of end utilization of funds. So please study what kind of procedures they have to ensure that funds have been utilized in the manner that has been that has been stipulated in the sanction letter. Whether they have a CA certificate stipulating that they have been used. And 2, you could also look at CARO to see whether what the auditor said regarding whether the term loans have been utilized for the purpose for which they have been sanctioned. Please go through these things when you go through the financial statements of the previous year. Please make sure that whether there is any kinds of deviation which have been pointed out in the last year's audit report, as well as the point which Mr. Gupta spoke about this quarterly current assets and book debt statement. What are the variation and what are the differences between what is there in the books of account and what is there in the what has been reported to the bank? So if there are unexplained deviations, let's say beyond 2%, 3%, then you have to be very careful before relying upon these stock statements, particularly where the gap is fairly small. So we have 2 or 3 more important tools in our hand today, like what he mentioned, like the CARO 2020, which talks about, one is the end utilization of all loans borrowed. There's one thing which is important. 2, charges is there in the Schedule 3. What are the charges which have not been registered? The third one would be this difference between book debt statement and between the books of account as well as the statements given to the bank wherever the credit facilities exceed 5 crores. It's extremely important that you see these areas compulsorily, and also any large instances of large related party transactions. This might indicate that there have been diversion of funds. I don't know how much of it is true or how much of it is not true, but even in the case of Adani, now the impression is that there are a large number of, large volume of related party transactions. Money has gone out of the country perhaps through related party transactions, and the money comes back as share capital or as FDI later on at a later date. This is happening across the country. I'm sure Adani is not an exception, but nevertheless that's come into the press. It's been happening it's a very favorite thing, this money going out of the country either through over-invoicing of imports, under-invoicing of exports, through related party transactions, through Hawala route, money going out of the country, and then later on that money coming back as share capital through offshore entities in Mauritius, in Isle of Man countries, or Cyprus, or one of these countries, money coming back as share capital. So ultimately the entry that you're passing is debit profit and loss account, credit share capital. Net entry that you're passing is really that. You're charging off as an expense and gifting shares to your promoters free of cost because the company is suffering in the process. If there's under invoicing of exports, that money should have gone to your profit and loss account in the normal course, and then later on this money comes back as share capital. So the effective entry that you're passing is credit share capital, debit P&L. I mean, this is an open secret. But of course, we don't know how many people are doing it, and to what extent. But anyway, that's one of the charges against Adani. The rest of it is some of it is all bakwas, what is there in that report. But this is quite likely. This has happened in several instances, and the RBI needs to take action on this. Yeah, please go through all the previous, all the reports which are available to the bank, so that tomorrow you incorporate all important observations there. Every single area you can't review by yourself, let's face it. Within the limited time, you can't review every single area. But you need to look at all the reports which are there, the previous year statutory central audit, the statutory audit report, the ICOFER report of the previous year, the concurrent audit report, inspection report. Some banks also have there's a large credit facility, they have a post-disbursement audit of the credit facilities to make sure that the entire documentation is okay. If there are any limitations pointed out there, I think it's important that these are captured in your LFAR, because every single one of them you can't go through. You don't have time for it. So please use intelligently all the data which is available to you to make your life better, or to make it simpler. Yeah, where there's an ATM attached to your branch, please ensure that you verify the cash on hand at the ATM also. Not merely the cash on hand at the branch level, but also if there's an ATM attached to your branch, please verify the cash on hand at the ATM, preferably on 31st of March or on whatever day you start the audit, or whenever you can do it, please verify the cash on hand at the ATM also. Not merely at and cross-verify there are usually three balances in a bank about giving the balance in the ATM. One is within the ATM itself. Two is the cash on hand. The third is the switch of the ATM service provider. The fourth one is your Finacle GL. Ideally speaking, all these four balances should match. So there's something called a switch balance. Then there's an ATM balance for your specific ATM. And two, you've got your cash on hand physically. And the fourth one is your GL, Finacle GL. So if there are any differences between all these things which are unexplained, please point this out in your report. Or if this has been subsequently corrected and you think this entry is material, please get it incorporated in your memorandum of changes as on 31st of March 2023. Similarly, where there are money receivable from other banks on account of other bank customers, other bank credit card holders using your ATM or vice versa, or your point of sale machines at various places, if using your credit card or your internet banking facilities, somebody has used somebody else's ATM, somebody else's those handheld devices which you find in every shop, or IMPS, whether these balances are all properly reconciled there, do they only represent the last couple of days transactions where settlement is yet to take place, or whether there are any unreconciled accounts in any of these transactions relating to IMPS, ATMs. those cash depositing machines. You have got today both, you've got an ATM to withdraw cash, you've also got a cash depositing machine. So please make sure that all these balances get tied up. Yeah, KYC verification is extremely important from the perspective of RBI. So please, in whatever sample that you're selecting, please ensure that all the KYC formalities are done. There's also something called as re-KYC after some X number of years. So please, if there's been, this re-KYC has not been done, or the account has not been blocked pending the re-KYC, please report all this in your report. RBI considers this to be extremely important. And there's also something called as KYC in highly sensitive accounts. I've got one more categorization. So please check these things out. And even this anti-money laundering. Today, most banks have got an anti-money laundering software which sits on top of the core banking solution, and it can pick up transactions of which are divergence with the borrower's profile. For example, somebody says the borrower is a salaried employee, and tomorrow you find that there's a 50 lakhs rupees transaction in his account. The anti-money laundering software picks up this transaction straight away. A message goes to the central monitoring cell at the bank's head office, and then that cell monitors these transactions and gives a feedback to the branch management. So please find out what are the cases where the branch has received feedback from the central anti-money laundering software, anti-money laundering cell. What are the feedbacks they've received and what have they done with it? And if any of these comments are open, it would be a good idea to put this down in your report, particularly involving large transactions. And if they cross a certain limit, they're also supposed to report to the, what is it? Some agencies there, financial, yeah, there's some report to be given to one of these central agencies about all these suspected transactions if they exceed a certain limit. And some banks also have a concurrent audit to make sure that the cases which have been closed have been properly closed. It's not just forcibly closed. So please pay specific importance to some of these areas, because RBI considers this to be very important, and they would consider that if we do give some feedback on some of these areas, our contribution as chartered accountants and as professionals would be more concrete today, that our burden as far as balancing of books, automation of NPAs and all has to some extent reduced. And if your branch is dealing with foreign exchange, please also check whether what is the position regarding FEMA compliances, that is advances given to borrowers where shipment has not taken place within some X number of days. There's a reporting to be given to RBI where you might have paid and given an advance for your imports, and tomorrow the goods might not have come at all. This could be a case where the overseas export has defaulted, or it could be a hawala transaction where goods have not come to the country, but you have paid an advance for purchase of for import of raw materials, capital goods. Similarly, export proceeds not realized within 270 days. Exports written off because they have become bad, whether they are within the limits which have been prescribed under FEMA. These are some important, and then foreign bills discounted, which are foreign bills which are outstanding beyond some stipulated time. There are reports which are given, and again here I think the RBI has linked all the ports and airports along with the software. What is that software called? They have networked all the today RBI has done a great thing. All our ports. Our Mundra port, our Bombay port, Visakhapatnam port, as well as all our airports through which where goods get cleared, and the RBI has got one software. I forget the name of that software. These are all networked with each other, and so the RBI can track which are the goods which have been which have happened, what has not gone out, what are the advances given which have not got where there's been no delivery of goods. They can track all this. I forget the name of that software. Huh? EDPMS, correct. There's a software called as EDPMS. So you could use this software. The access is available easily at the branch level for this EDPMS, and through this you can find out many of these things. Yeah, please be careful about contingent liabilities, claims against the bank, off-balance sheet items are. Letters of guarantee in the case of the famous Brady branch was an off-balance sheet item, unreported. not recorded in the core banking solution and unreported. Running to 10,000 crores or whatever that figure was. Yeah, we have spoken to quite an extent about IFC. I think I'm gradually running out of time. What time do I need to finish? 1:15 right now, right? Yeah, we have spoken about IFC to quite an extent. It is for the statutory auditors to decide what should be the scope of IFC as far as branches are concerned, whether they will do this at a central level, or whether they're going to ask for a full scope IFC from the branch auditors, or they're going to ask you to do some limited IFC. Because there are many things like you can't do in a branch audit, like entity level controls, record to report. Many of these things can't be done at the branch level. So it just depends upon what they want you to do. And if you have to do a full scope IFC, then I think you should mention that you can't do entity level controls. You have not seen some of these things which are, let's say, the ITGC. In its full, to its fullest extent, you have not seen ITGC, I mean, Information Technology General Controls. So they have given some guidelines of how the statutory auditors should decide what should be the extent of IFC at the branch level. The implementation guideline speaks about all this. They have spoken about what is centralized controls, what is non-centralized controls. Yeah, this in IFC, the segregation of duties is extremely important, where every job is, every activity is done by at least two people are involved, and no single person can put through a transaction. Again, this is something which got broken at Brady Street, Punjab National Bank, where one person was putting through all this letters of guarantee through letters of guarantee through SWIFT messages. They were not recorded in the core banking solution, and then the fraud went undetected for a long time. This is a classic case of failure of segregation of duties, and the same transaction being checked by more than one person before it is committed. I think for paucity of time, I'm going to skip some of these things like yeah, if any of our activities, this is not very prevalent in PSBs, but in the private sector bank, large part of the activities are outsourced to another service organization. And so we have a specific guidance note on these matters where activities are outsourced. It could be a call center. It could be collecting all documents for disbursement of loans. Today, even record keeping, where all your old records are kept in some with somebody like PN Writers, where your records are all kept there, even including loan documents are kept at PN Writers. So you have to be. So if you want to see any documents, loan documents, you may have to go to this agency's facility and then do an audit there. If you want to see any of these, let's say in ICICI Bank, you want to see the home loan mortgage documents or the car loan documents, you might have to go to one of these outsourced agencies where all records are maintained. Just the other day, I had gone to one of these kind of outsourced agencies, and even RBI has kept a lot of documents there because today nobody's got space in their own office to maintain records. So everybody is outsourcing this to these kind of agencies, and I could see huge trunks with a lock, and on top of it cloth is tied, and then the wax is also put there. I asked him, what the hell is this? He said, this is all been done by RBI. So RBI keeps a lot of records even at this outsourced record keeping agencies. And a lot of banks today are keeping even their original loan documentation outside agencies. We have outside processing centers, particularly where a lot of retail customers are involved, large retail customers are involved. Yeah, post-dated checks management, contact point verification, where you want to give housing loans, you want to give car loans. People have to go to the borrower's facility, borrower's home, office, verify, and come back. So many of these activities get outsourced. And the classic case of outsourcing activities is your ATM. The largest activity is perhaps your ATM. So you need to, particularly central statutory auditors might have to today, virtually today, every branch operator has got an ATM attached somewhere. So if where there are number of ATMs are very large, the auditors might have to even look at what kind of controls are exercised by the outsourcing ATM outsourcing agency. Yeah, then we have our long form audit report. The long form audit report is to cover many areas. It deals with cash, balance with RBI, SBI. I mean, all these balances with the RBI, SBI, please don't depend upon one unsigned statement which has been given to you by the bank. It is important to ask for a direct confirmation of balance. Most banks will give you an unsigned statement and there'll be one standard statement at the bottom saying that this is a computer generated statement, so it need not be signed. This is extremely dangerous. I think you should ask for a, and if they don't give you, I think there's even a question asked in the LFAR, is this independently confirmed? I mean, so I think it's very important that anything important like a bank balance, balance with RBI, a balance with SBI, I mean, balances with mutual funds, balances of the treasury operations, all these things get independently confirmed by NSDL or whoever it is, rather than merely signing, depending upon some unsigned statements or unsigned statements downloaded into Excel and given to you. I beg your pardon? Yeah. Yeah, as far as if there are a large amount of gold loans pending, then when were they last physically verified? Is the gold still there? Who has evaluated its purity? These are processes to be done internally by the let's say you're doing the audit of Muthoot Gold Finance. There would be a large number of gold loans given there, and these gold loans would have to get physically verified. Its purity checked regularly. This is a system which is put into place by them. It's not something which you and I can do. So you have to see what procedures they have as far as these areas are concerned. Yeah, this even though the interest calculations are all automated, interest calculations in both advances and deposits, and all the application of all fees is automated, it's important that you verify at least five transactions of each type to make sure that the logic within the system is working properly. Particularly in advances, large advances, because a cash credit account has got daily products. You might have to ask for the interest dump and verify these interest dump and also make sure that the interest rate applied is proper. And there's also something called as an interest failed report as on 31st of March, where for some reason the core banking solution fails to debit interest or credit interest on a deposit. It fails to do it for some reason. So you'll have to find there's something called as an interest failed report. So if you can get hold of this interest failed report, you can check that out, and then if there's a need, you can incorporate that entry into the MOC. And then any divergent trends in major items of income and expense. Mr. Gupta pointed out one such case in the morning. So any divergent trends in major items of income and expenditure, audit inspections, frauds, and then branches dealing with forex transactions, any adverse features in NRE, NRO, NRNR, EFC, RFC accounts. This is this portion. You've got NRE is non-resident external account, NRO is non-resident ordinary account, and then we have got NRNR, and then EFC, RFC, many of these things. Then branches dealing with advance of greater than 100 crores, you've got additional questions to be answered. Then specialized branches, you've got some more things to report as far as LFAR is concerned. When you're looking at advances, though this is Suresh's territory, this credit summations and debit summations are extremely important. There's usually a report saying what are the aggregate credit summations and debit summations during a certain year. And of course, if there are any contra entries like what he was pointing out in the morning, they have to get eliminated to the best of your ability. They have to get eliminated. And then if credit summations are poor and that figure is falling short of the turnover of the company significantly, it means that either money is going through some other bank also, or the books could be bogus. This credit summations in your account, ultimately all your collections from your customers should go into your CC account. So the credit summations would generally give you an approximate idea of what is your total collections during the year, subject to adjustments for contra entries, loans, loans disbursed during the year, share capital coming in during the year. Barring these kind of adjustments, the credit summations would give you a very good idea of what the company's collections are. And if your opening debtors plus sales minus closing debtors is quite different, very different from that credit summations, it means that something could be going wrong. The company's balance sheet looks beautiful, but then there are hardly any credits in the account, which means that something is wrong. Please attach the highest importance to credit summations, reviewing them. And then this office accounts, breakup of suspense, sundries. In fact, this is an area again where the RBI wants a report from the central statutory auditors. If you have any comments on unreconciled entries in suspense accounts, sundries account, clearing adjustments, old items lying in some of these, please take a look at this carefully. You may have some lurking problems there. I think there are some guidelines, I'm not very sure about the nitty-gritties, but there are some guidelines saying that you must all have all your transactions with only one bank. You cannot have it with multiple banks. No, I think there is some guidelines have come, maybe he'll be more up to date. See, if it's a consortium account, it's a consortium account, it's a different story. Yeah, if it's a multiple banking, I mean, if there's a consortium banking arrangement, then this is something which should even the leader of the consortium should monitor and monitor. Or let's say hopefully the auditor of the main consortium leader should at least review this. But generally, I'm just trying to generally stress the importance of credit summations to make sure that they are in line with the turnover and the collections which are reflected in the audited financial statements. No, please don't, see one thing, don't rush to the point of concluding everything. You point out that in this branch, the amount of transactions is very low in relation to the turnover reflected in the books. If it's for the bank to investigate that, it is not your job to investigate that. But don't stop saying that, oh, this could have happened, don't give explanations for it and try to avoid reporting. I think we should stop trying to talk for the bank. Let's talk for ourselves. Yeah, they can, 100 theoretical explanations can be given you, this could have happened, that could have happened. Let's not worry about all that. And my advice is, even when you do, if any of you are doing internal audits, particularly large internal audits, don't worry whether something has gone wrong or not. If there's a process which permits something to go wrong, if you think a process is deficient, please point it out. Don't wait for something to happen there. So that tomorrow if something happens there and the bank does not, and the company does not take corrective action, you can always point out saying, look here, I pointed out that there is a system lacuna here. So don't wait for something to happen. You don't have to conclude, you are not in a position to conclude every matter, and nor is it your job. Point out there's a warning signal here, please do whatever you want. Yeah, your application of GST, whether the GST is being charged at every single transaction wherever it's applicable, this would be important. And of course, the central statutory auditors would generally definitely look at the 9 and 9C file for the bank as a whole, or for each registration, because in the case of a bank, every state will have a separate GST number. So there will be nearly 30 or 35 GSTR 9 and GSTR 9Cs filed for 35 branches, and then the reconciliation of the figures with the audited accounts would be very important, important for somebody to see and to make sure that you have complied with all your GST formalities. And no entries relating to income which has gone away where GST is applicable is debited or credited to a non-GST, let's say on an interest account. It should not get clubbed. For example, on fees you have got GST, but that fees should not get credited to, let's say, an interest account. Because if it goes to the credit of interest account, then it will escape GST completely. Or if it gets credited to an expenditure account. Yeah, TDS, we have already spoken briefly about this. 194N dealing with banking cash transaction tax. 194Q, purchase of goods above a certain limit. 206 AA, higher rate of tax where the PE has no PAN. 206 AB, higher rate of tax for non-filers of tax returns. Then we've also got TCS, which has not been, I've forgotten to put the TCS here. There's new rule which talks about LRS scheme, where TCS is applicable. And these 15Gs, 15H, many times these are all received in blank and kept by the bank. The depositor does not fill up all details. This can get misused. And whether these have been entered properly into Finacle. Wherever he's given wherever there are 15G, 15H, or the depositor has got an authorization from his AVO stating that you deduct tax at a lower rate. That at both the end date, the closing date, the limit, that these things are configured properly in the core banking solution, it's important. Yeah, I've already spoken about suspense and sundries, office accounts, then all kinds of HO parking accounts, whether there are any old items in any of these accounts, it's extremely important. And I think if it's more than, anything is more than 90 days, you need 100% provision for it. Debit balances, not credit balances, debit balances. And one more area which I think I have not mentioned here is all these inoperative accounts, transactions in inoperative accounts. This could be a favorite area for perpetration of frauds. I think my time is up. I better close. It's 1:30. I'll just take one or two questions and then hand the mic back to Divya to do whatever, to continue with whatever other things they have. So thank you all very much. I've enjoyed being here with all of you. Yeah, if any of you have any questions, one, two questions, other than from Anil, I'll take his. No, it's okay. I was just pulling Anil's leg, that's all. Yep. FD.
Unlike old 1956 Section 125, 2013 Act Section 77, no exemption for
Pledge.
So it means a charge has to be created.
Yes.
But this practice is not prevalent throughout the banking.
Agreed.
Oh.
No, accepted. Yes, Anil. I was just pulling your leg. Let me benefit by your wisdom. Okay. Any other question?
Sir, just in case we have figured out a small fraud, of course, bank could have also found it out and we have reconfirmed verifying that. Let's assume it was done by some X Limited or something. Do we have to report to the MCA for the X Limited on behalf of it? That's my point. We report it to the bank, of course.
I think the guidance note on 143 reporting, Section 143, the Companies Act, that says if the fraud has been detected by the client and not by us, okay, even if it exceeds 1 crore, you don't need to report to MCA.
Okay.
Okay, that is there in the Companies Act. I'm not sure whether that is there in the, yeah. So usually if it's only a fraud which we are going to find out, we need to report. And I have rarely come across a case where an auditor has found out a fraud. It's not because of the way we do the bank audit in such a short time, it's extremely impossible to find out any frauds. Perhaps some concurrent auditors may have found out, I don't know. They may have found out. So most of these frauds are, all this reporting directly by us to the regulator will apply where the fraud is actually found out by us, or we are pointing out to a suspicious situation where a fraud could have happened.
And one more small doubt. After this CBS and RBI regulations coming in as well, even now we have found out in NPAs or provisioning there is some malpractice. Like last 15 days, they're going to just adjust the account to not call it an NPA. Like this kind of situations we have still come across. Window dressing, yeah.
100% you should point out.
Yeah, I mean, we are pointing out, but why is the system still having that?
See, as he said, like Mr. Gupta mentioned, the computer can only find out certain things. If it falls into a certain logic, you check this, you check that, you check this, it can find out. But either if the data given in the system itself is wrong,
No, will
or where, let's say, I do evergreening through crediting money to giving a loan to a sister concern of the borrower, and that money gets routed back to this. Obviously, the computer can't find that out.
Yeah,
But one thing, one thing I would say that wherever you're doing an audit, please try to find out who are all the related parties in operating through the same branch and look at their accounts together.
even this will also help us to report on IFC as well then, if that happens.
Yes, absolutely. The bank is deliberately doing evergreening, whereby they give money to regularize an overdue. It would be it's a lapse of control, and it's also smacks of dishonesty. So whether it's in IFC or wherever it is, I think it's very important that these things get pointed out. I mean,
Thank you, sir.
thank you all very much. I've enjoyed being with all of you. Thank you very much.
Thank you, sir. Thank you. You have delved upon many items like materiality level touch points with regard to end utilization of funds, post-disbursement of audits, post-disbursement audit, KYC, which are highly sensitive matters, as well as entry-level controls, as well as IFCs. You have also dwelled upon SODs, a little bit of LFR. Again, we have a separate session for LFR in this case. Also that we have with the 15G and 15H incorporation into the finacles. Thank you, sir. Thank you very much for this. May I call upon Chairman Divya ma'am for presenting a memento to the speaker. Members, we will get back to the session right at 2:30 p.m. post the lunch session. We will be starting with LFR reportings. Thank you all.